Hey, what's up YouTube? I'm Zeke and welcome to the Dream Green Show. In the last episode, I showed you guys the top dividend stocks to buy in 2021. Well, the problem with that was if you was trying to live off your dividends and pay your monthly rent of around $1,000, some of those dividends was paying out quarterly or semi-annually. And that's just not how money works. You have to pay your bills every single month. So I was moving way too fast in that video to where you guys had asked me a ton of questions. And in this video, I'm going to answer all of those questions. Like, what are dividend stocks? A dividend is a distribution of some of a company's earnings to a class of its shareholders as determined by the company's board of directors. Basically, dividends are payments made out by publicly traded companies as a reward to investors for investing into their venture. So now that we know what dividend stocks are, dividends are paid out either monthly, quarterly, semi-annually, or annually. And that video just was not going to get the job done if you are trying to pay your bills out every single month. So in this video, I'm going to give you 3 different real estate stocks, which are called REITs. We are focusing on these because they usually have the highest dividend yield. A dividend yield determines how much a company is going to pay you out per share. And we're focusing on REITs. REIT stands for Real Estate Investment Trust. And by law, they have to pay out 90% of their taxable income back out in the form of dividends to their investors. So they usually have high dividend yields, especially if they're a good REIT company. So I'm going to give you 3 different real estate REITs in this video to help you pay off your $1,000 monthly bill. I'm going to tell you guys exactly how much money you need in order to pay off your bills. But before we dive into it, this video is brought to you by Webull. Sign up now by clicking the link down in the description, deposit $100, and now you can receive 2 free stocks valued up to $1,850. With those 2 free stocks, you could keep them inside the platform and decide to use it, or you can sell those 2 free stocks and withdraw all of your money. It's literally free money. Also, I left a link to Coinbase down in the description. That is by far the easiest way to buy and sell cryptocurrency. But enough talking, let's go ahead and dive straight into this video. Welcome back, dreamers. Before we get started, I want you guys to go ahead, hit the subscribe button and hit the notification bell, because right now YouTube is acting real funny with my channel and not really pushing my videos, and a lot of my subscribers are saying that I'm not even showing up on their feed. So in order to solve that, go ahead and hit that notification button after you hit the subscribe button. But our first REIT that we're going to look at is AGNC. Right now this year, at the time of the recording of this video, AGNC is up 38.5%, so 38.5% in a single year. AGNC has a high dividend yield of 8.02%. Usually companies have a dividend yield anywhere from 0.5% to 1%, just like Apple. Apple has a dividend yield of 0.6%. So when you see a real estate REIT like AGNC that has a high dividend yield of 8.02%, you know that you're going to get paid out some pretty nice yields in your dividends. AGNC is a real estate REIT. The company invests in residential mortgage pass-through securities and collateralized mortgage obligations for which the principals and the interest payments are guaranteed by the United States government-sponsored enterprise or by the United States government agency. Guaranteed by the government, guys. So you know they're gonna get their money. It funds its investments primarily through collateralized borrowing structures as reproduced agreements. So the reason I like AGNC, because with them working with the government, leasing out to the government, they know that they're going to get that money back because it is guaranteed. So with AGNC working closely with the government and having a high dividend yield of 8%, and they also pay out every single month, that is why AGNC is so high on my radar and it's inside of my portfolio, performing very, very well to where it made the top 3 list of this video. Make sure you stay to the end of this video, because I'm going to tell you guys exactly how much you need in order to make $1,000 every single month from these 3 dividends. The next one is Prospect Capital PSEC, ticker symbol PSEC. This one is at $8.11, and over the last year, they're up 83.79%. So they did a pretty good job recovering from the economy, and they have a high dividend yield of 8.81%, guys. So it's even higher than AGNC. Prospect Capital provides financing to middle market companies. Its portfolio is mostly debt-based, with 80% of investment in first-line loans and other senior secured debts. It's also well diverse, as its portfolio is spread across more than 120 different companies in 39 industries. Prospect Capital tends to be a little more aggressive in its dividend policy. Rather than managing the payout with semi-annually special dividends, Prospect chooses to simply pay a higher regularly monthly dividend. Although this have got the company in trouble a few times the last decade, it had to cut its dividends once during the pandemic, and another time in the last 10 years it had to cut its dividends. So that's the risk you take investing into companies that have such large dividends, but it seems to be working out for them as well, because once they recover, they rise their dividend yield right back up to its high percentage growth. Another reason I like PSEC is because of their CEO. Their CEO is John Barry, and he's a serial buyer of the shares inside of PSEC. He has bought over $144 million worth of shares in his own company. So you can't say that he don't have any skin in the game. So a CEO like him that actually believe into the company makes me want to believe into it as well, and go on ahead and collect some sweet dividends every single month from this company as it continues to grow. And that's going to move us over to stock number 3, STAG, ticker symbol STAG. Now, at the time of the recording of this video, STAG is at $36.47, and over the last year, they're up 37.76%. STAG has a dividend yield of 4.8%. It's not as high as the other two real estate REITs, but there's something special about STAG that I'm very attracted to that makes me want to invest into this company. Now, STAG, their real estate portfolio focuses on distribution centers. If you haven't caught on yet, 40% of their portfolio focuses on e-commerce, and they work very close with Amazon. So yes, as long as Amazon is doing well, STAG is going to continue to do well because all of their facilities is being used by Amazon. So you know they're going to have a cash flow every single month. So with them having a dividend yield of 4.8%, which is a little lower than the other REITs, they're able to grow their company a little bit faster because of the growth revenue that they're going to get in from all of the e-commerce websites like Amazon. STAG has a long runway for growth. Even after a messy jump in 2020 due to the pandemic, only about 16 of all retail sales are from e-commerce, and the logistics space is highly fragmented. STAG's management estimates the value of their market at around $1 trillion. Now, this isn't a stock that you'll get rich quick owning. If you're looking for a safe real estate REIT to own for the next couple of decades, STAG could be one of the best real estate stocks for 2021. There we go, guys. We have 3 real estate stocks that's going to pay you out dividends every single month. So we don't have to wait every quarter. We don't have to wait every 3 months. We don't have to wait every year to receive these dividends. These high dividend yield real estate REITs is going to be able to pay us out every single month to pay off our $1,000 bills. And the formula to find out exactly how much money you need invested to make $1,000 every single month is really, really simple. So the average dividend yield of all of these stocks combined is 7.2%. So you take all of the percent yields and you divide it by 3, they get you 7.2%. And then you want to take your $1,000 every month, and it's 12 months in a year. So we're trying to make $12,000 a year. We're going to take the $12,000 and divide it by the dividend yield of 7.2%. And that's going to get us $166,000. $666,000. That is little, what's his name? That's some Lil Nas X numbers right there. It's too many sixes for me. But yeah, guys, you'll need $166,000 invested in order to make $1,000 every single month with a 7.2 dividend yield. Now, I know what you're saying, that you need, yes, you're gonna need a lot of money in order to live rent-free, guys, but it's not impossible to get there. In fact, if you was to invest $500 every single month with a 10% annual return over the next 13 years, you'll be able to live rent-free. And if you increase that to $1,000 invested every single month with a 10% annualized return, you'll be able to get $166,000 in under 10 years. So yes, it's possible. You have to consistently reinvest inside the stock market, consistently reinvest your dividends, and pretty soon the compound effect will start to take place itself, and your portfolio will start to grow even faster than you could reinvest into it. But yeah, guys, if you made it to the end of this video, remember to hit the thumbs up button. It helps out this channel more than you can even imagine. And make sure you hit that notification bell, because YouTube be acting funny sometimes, and I think I know why. But go ahead and hit that notification bell. It helps me out. And also, don't forget to pick up your 2 free stocks by clicking the link down in the description for Webull. But other than that, I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.